Everybody, recently I sent out a poll into the VIP chat asking if you wanted to see a case study from me, so we got quite a few votes on that to say yes. I'm going to just load up a random market. I've got the euro to the Swiss franc here. The reason I've gone for a bit of a strange pair is because you've all seen my bias and analysis for a lot of the different main markets, our major pairs, so I thought that I would go to a slightly different market, one that I don't think I've ever placed a trade on, just to show you that the concepts that we use in terms of analyzing a market and gaining a bias and trading can literally be used on any financial market. So I'm starting off here on the monthly just to get an overall idea of what's going on. So the first thing that we need to do right now is just analyze the structure and decide what that is telling us. So following the structural points, if we get the brush tool out, we have a high set in the market here, a low set, a lower high, a lower low, a lower high, and then we trade all the way down to a lower low, another lower high, another lower low, and it seems that we've come to create another lower high, evident by the fact that we've had a displacement and prices began trading back down. As a result of this, we're therefore expecting that this low is a current final target. In order for this market to continue trading bearish, we are going to expect that price will exceed this level, and therefore as we go through our analysis moving forward, we do so with the assumption that price is going to continue trading down to exceed this final target. So now we move inside, we can say that, right, we know that after the mitigation, which is actually quite a perfect mitigation here of the last buy to sell, you can see it just taps in. So what that would have looked like for me with a 3-box strategy, so to say, we would have taken the impulsive wave like so, and that is pretty much the only zone I would have highlighted, because anywhere beneath is just massive inefficiency that we want to see filled. Anywhere above, I would argue, has already pretty much been mitigated, so that is the one region we did want to see price react to. This little region here acting as a distribution, I'm that familiar with Wyckoff now that I can just pick them out of the market like that, just because we have sort of phase A, some consolidation, a nice high volume push through, come back down, displace the low, retest, and then move lower. And since that distribution, we can pretty much just see that price has had one leg of being bearish, one leg of bullish, and now we're into the next leg of bearish. So overall, we see this as impulse correction, impulse, but we're currently within, or we appear to currently be within, bearish impulse of this next leg lower. So my bias is that we are going to continue trading bearish until any displacements are delivered that may suggest a correctional wave. But overall, my bias is that price is going to exceed this final target. So whether we get a correctional wave now or whether we get a correctional wave before the final target is met, that doesn't matter, because we are still going to exceed it, regardless of how price plays out in the meantime. So take that as our impulsive wave. In order to have found a point of interest in here, we'd have to do further analysis using a range of time frames, so I'm not going to bother myself too much about that. We can just say that yes, we know that price has mitigated something, we've had the break of structure, so we know that that is now a protected high. So we have the BOS, which is break of structure. It appears that down here I put final market instead of final target. Let's just change that. That's what happens when you try and type and talk. And then we also have this as a protected high. So the second so in bearish structure at least, the second the low is broken, that previous swing high in the market then becomes protected. So this was previously the protected high. The second we had the break of structure, this then became the new protected high. So let's now go lower onto the weekly and just see inside of this bearish structure. This is one thing I like to do, is just draw out, familiarize yourself with what's happening. Okay, so as of current, this right here is a protected high. In order to keep this bearish structure valid, this is a protected high. Now, if this protected high is exceeded, we then revert back to this protected high, which I can actually type in, because what's happening is that we can have multiple protected highs because we're looking at different structure. Now, in our eyes, this is a single impulse, but as we've now gone to the weekly and looked lower, we see that what was a single impulse on the higher time frames is actually bearish structure in itself. Now, we are going to continue doing this pretty much as we go down the time frames, is viewing structure within structure, seeing what the market is telling us, seeing what the current trend is, and finding ways to get in on that trend, given that it still appears to be valid. So, as stated, moving forward, we just have the analysis that this is a protected high. Let's now go down to the daily, and it appears that within this impulse down, we've had impulse, correctional wave, and then from this impulse, what I'm seeing is that this should have been a protected low. We've displaced that, which means that this would become the protected high. We have protected that high, reversed in the market, and it seems like we are making a leg lower. So I am going to assume from now that we have this as a protected high. So we can remove this point here. And my expectation from here is that price has reversed at this level and is now ready to make a next impulse down to at least this region here. So that would be our final target now. This would be a protected high. I don't actually have a template for that. There we go. And now we can go lower, making the assumption that we've reversed here and we want to find opportunities to go short to exceed this final target. So let's now go down to the 4-hour time frame and look inside of this now as an impulsive wave. Now, I am seeing straight away we have a zone that arguably needs mitigating here. So I'll put that as a point of interest. Now, the reason I'm looking for points of interest is because if we look at this structure, we've had high set, low set, high set, low set, and then what happens is there is a high somewhere within this region that gets broken here. We have price trade back down without exceeding the previous low. It's actually protected that low, and then it's traded up to exceed what should have been a protected high. So we have confirmed some short-term bullishness. Now we need to decide that, well, where is this bullishness going to trade us to? Because our higher time frame bias and the bias we've gained from viewing structure on a higher time frame has told us that we are expecting price to continue bearish. So because of that, we know that this region up here should be a protected high, and as a result of that, we're going to make the assumption that when price trades bullish here, it is only doing so to put in a correctional wave and in order to mitigate some of these positions. So the two regions I'm looking at is this last buy to sell, as well as this point of interest above. Now, we can see that price has actually tapped into this and displaced. So when we go to the lower time frames, we can have a better look at what's happened there. But as of right now, just use a 3-box strategy to make this look more appealing to you. This is pretty much what I'd be doing. We don't always have to include the entire impulsive wave. Obviously it started here, but we already know that all positions in that region have been mitigated. Where the real institutional control started was from this heavy buy up to a heavy sell, and then this region down here is just an accumulation, just consolidation, where again it's not too relevant because we've been in a period of sideways movement. Now, as I said, moving forward, we've just tapped into this zone, so let's now go even lower. Let's say the half-an-hour time frame and just see what's happened. So we had price trade in. We can assume that what's happened here is that we had a heavy fundamental that has impacted the market. So I won't get too caught up on the fact that this, yes, has disregarded the low, because straight after doing so, it has resumed its bullishness. So this, to me, right in this region here, is definitely a distribution. Now, we can see that what's happened from this distribution is we had price trade up. We can see that some liquidity was created, a high volume push through, which is the up thrust, and then straight after we've done that, straight after we've manipulated the market and tapped into the point of interest, we've then or the institutions have then executed large sell positions, which has brought the market down heavily, displaced the market, and then from here we've had that retest, which we like to see. After that, we've then continued to trade down bearish. You can see here that we've had a bit of a liquidity sweep. I'm not actually too sure what's happened here, because it's not come to mitigate any real position. Again, maybe something fundamentally drove that move. Quite hard to tell what's really happened, but all we know is that straight after that we have broken this low. So if we now go down to a 15-minute, we can make the assumption that this alone is an impulsive wave. So impulsive wave there, that this now should be a protected high within fractal structure. So we can look inside of this and say, right, where do we want to see mitigated? I'm going to go even lower just to try and really view where a point of interest may lie. To me, that is going to be this region in here. I think we definitely have points of interest in this region, POI. There we go. Looking further up, it does appear as if everything else has been mitigated. I'm not going to go too much lower, because I do believe that this is probably the most likely zone to be mitigated. If we see price blow through, that could be a sign that we're actually going to disregard this analysis. If we disregard this analysis, we're either going to A, mitigate the higher point of interest, or disregard this analysis completely. However, price has tapped into this, and we have had some consolidation, and since doing so, then had a fractal break of structure. So we could argue, if we go to the 1 minute now, that price is actually reversing after the tap, and that we are ready to execute sell positions. If we manage to get in on sell positions, this is our short-term final target. That is where we'd look to take a partial potentially. But because of our higher time frame analysis, if we zoom out now, we know that we could potentially ride that sell position down to this low, because that is another final target on the higher time frames. Or if we wanted to hold a longer term position, we could even look to hold price down all the way to this point. If we wanted to hold even longer, we could then look to hold price all the way down to here. Now, it's not guaranteed that price will make the move lower from this point, but it is very likely, because that is what our bias has told us. I personally, I'm a day trader, so I'm not looking to hold trades for that long, but I'll definitely be looking to take advantage of this final target at least with my take profit. So that is my analysis of this market. I hope you've managed to sort of pick up what my bias was along the way. And there was a lot of talking, there was a lot of waffling. I probably did go through it quite quickly, but I'm at a point where I can just look at a market and determine what I think is going to happen. This is my current bias, as I said, so waiting to see if price potentially reverses inside of this point of interest. If not, okay, let's look inside of this wave. Potentially, we might see price want to come up and fully mitigate this position up here. If it blows through and exceeds this level, as stated, that is then when we'd look for the higher point of interest and do the same thing again. So it's all about doing a top-down analysis, creating your bias, using a set strategy, a logical strategy. So I already know exactly how to tackle the market no matter what price does. So I already know that if price is to want to continue this bearishness, we have two regions where we can look to enter. We have certain criteria for entry confirmation. If we decide we don't want to continue the bearishness and we go bullish, we know again, where do we want to see price go? We know if price taps into this, we'll look to go short again. That is my case study on the euro to the Swiss franc pair. I hope you managed to actually get a lot from this video on the way that I analyze, the way I view the markets, and also just the strategy that I use to do my top down, because this is the same on every single time frame. If you have any questions, make sure to message me personally. As I stated, this case study is exclusive for all of you guys in the VIP chat. So if you do have any questions, make sure to let me know.